Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Tuesday, May 2nd. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about the tool of charts and how they can be used to help make good decisions as a trader, this will be a video for you. Real quick, a couple clarifications. Number one, the price you see over here will be changing and the candlestick you see right there will be moving around. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, SOFI. This is what we call in the world of trading a big old gap and trap. Price closed right there on Friday, opened up there, hence the gap up. And then, I mean, just true story to think that there were some people that were buying up around this area. And I mean, just a complete collapse after it gapped up. So a nasty gap and trap here, which now brings about some potential interesting dynamics, given that the price is now all of a sudden, and I know I squeezed down the charter quite a bit, but it really just shows that it's been a long time since the price has been down around this area. But the price is now starting to sit right around these previous lows right here. Whoops. Around the $5.40 mark. Nope, you're not even behind my ugly mug. There we go. So if you look right here, you can see that there were some bounce points right there. Now, some people may disagree with me and say, no, Clay, that green line, in fact, I'll throw it in there just, some would say, and I understand where they're coming from. I don't think I would disagree, but some would say, no, Clay, the price actually needs to be down, or that green line needs to be down there right around that 530 mark. But point here being is, in fact, I'm going to cheat. I'm going to try to please everybody. Let's just call this a support zone. So the next couple of, the next key dynamic in area on the chart is going to be down around this area, and we'll call the top part of the support zone 540, bottom part of it down there at $5.25. If the price were to come down to that area and push down through all those, that would just symbolize the chart getting that much more ugly. But from a trading standpoint, are there guarantees? No. But are you crazy? Is it irrational to think that the price could come down around this support zone and then find some buyers and get a bounce upwards? No, absolutely not crazy, but also absolutely not guaranteed to happen either. But nobody could accuse you of being irrational in that thought process. If there is a bounce in the upwards direction, then the near term, that key level of resistance to watch is going to be right up there at about $5.73. Next one, IDEX. Very, very impressive move today, especially when you correspond that with the volume. I think over like 600 million shares or so. Granted, it's down below 10 cents, but still a lot of volume. Nice movement here as the price came back to life quite a bit and is now given a very straightforward, I'd say, breakout point right up here at that 5 cent mark. So keep a close eye on 5 cents. With that being said, even if the price breaks above 5 cents, I'd say don't get too excited because let me squeeze this down. And there you go. You see that pink line creeping into place? That right there is the very famous, the very well-known 200 period moving average, which is valued right up there around 0.053, give or take a little bit. So my point here is this, is that yes, if 5 cents is broken, definitely a good thing. But not that far away at 0.053, you have another potential area. So you don't want to be one of these situations where you go all in and then it gets rejected by the 200 period and rolls back over. Now, to be fair, maybe it blasts up through here, and that's the leading indicator that the 200 period is also going to be broken. That's absolutely possible too. But my point here is that 5 cents, while a key level of resistance, it's not the only one that's hanging around that general area because you have that 200 period not that far away. In terms of if you like to play more so pullbacks, then there's an interesting level down here right around the 3.5 cent mark to keep an eye on. But overall, it's setting up nicely. Good solid formation here, and it's really just a question of, can the price get up through that 5 cent mark and then the 200 period moving average? So grab some popcorn. Next one, SNTG, and I like this as it's got a good solid pattern here, and as I draw this pattern, please realize that I'm not trying to impress you. I'm not trying to imply that this is some great discovery or special talent. I assure you a lot of people have drawn these lines, and I say all that because when a lot of people are watching the same lines and wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movements. And what we would have here, just to keep it all the same color, so we have our resistance, we have our support, we have the big upwards move here. For you golfers, I'll make it more visual, put the golf hole down there. We have a bull pennant pattern. So as I've said, no guarantees, but is it plausible to think that if the price can bounce back up, get to that top part of the pattern, get the break, that break in of itself, even if it is just a self-fulfilling prophecy, could create additional buying pressure and momentum? That is certainly a valid thought process to keep an eye on. So watch that right there in terms of, if the price can recover back up there. But this one has been a very quick mover. Crazy to think that it was just down at $2 on Friday, now pushing potentially $10. But I know a lot of these stocks have been getting popular lately, so worth keeping an eye on and seeing if the bull pennant can get an upside breakout. Next one, GDC on the lines. Another squeeze here that happened on one of these Chinese stocks that's been going bonkers. With these, you always want to be careful. Reduce position size because they are volatile. They can make you rich, but they can make you poor too if you're not careful. So just keep that in mind. But for those of you that like these situations, that's why, the point of a watch list, to get you, to point these out, and not that you rush out and buy anything, but to at least watch it, like I said, if you enjoy these ones. So as far as their levels of resistance are concerned, once again, going back to that talking point of self-fulfilling prophecy, you got to think that a lot of people have drawn that trend line right there, which puts the breakout point right up around that $40 mark. In terms of if you like to play more so pullbacks, then right here you have a little bit of a gap right there. So gap, not that gaps have to close, but down around 2350 could be an interesting level. And then once again, just to turn this into an overall pattern, maybe that registers better with your mind. So you have the resistance, you have the support, you have the big move up here, golfle down here, another bull pennant pattern. But yeah, very, very fast mover. And it's just one of those situations. Is this the start of something even bigger with what happened last week? No guarantees, of course, but I would understand where that questioning comes from in your mind. Next one, AMC, and as I speak, very, very impressive movement. And like I said earlier, this is why I like to do these when the market's open, because check it out. Last 30 minutes here, good volume bar, volume coming in nice and strong, and the price is now pushing up towards these highs at that level of resistance. So the good news here is that this level of resistance at 555 has been broken, so that's where the first update comes into play, and this is just based on a foundational rule in charting when levels of resistance are broken. Close above, you want to see them act as support. So moving forward, best case scenario in terms of what would make the chart look the strongest would be if the price can stay above 555. I'll go ahead and get rid of that level as it served its purpose now. But from an overarching standpoint, it's not like it's the end of the world if that level fails, because not that far below, you do have more so the overarching level, that purple line there, 50 period moving average, which is currently valued at 541. And then as far as current levels, right now it's really just a question, at least for me, is this thing going to double top, or is this thing going to be able to make the move up through that high right there of $5.70? So came up here during that opening 30 minutes, rejected. I mean, pretty crazy day when you think about it. Hit that level, rejected all the way back down there, and now it's recovered all the way back up, where it's now once again knocking its head on that level. So that'll be, I think, the big question mark a lot of people are throwing out there is, can this 570 mark get broken on Tuesday? We'll see what happens. Real quick, want to take a quick break and personally invite you to get signed up for this free live online class that I'm offering later on in the week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free live class. If you're watching on YouTube, there's a link down in the description box you can click on. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying, then definitely get signed up for this free live online class. Next one here, QH, and this is a very, very ugly looking chart. But as you longer time viewers have heard me say, there can be opportunity in the ugly. And I should note that these are situations where if you don't like stop losses, or don't know what a stop loss is, or don't like to manage risk, I mean, you shouldn't even be trading in the first place. But that's another entire video. But this is definitely one where if you're not going to be managing risk, then don't even try to play these ones. But there can be opportunity ugly, because yeah, this thing's getting very, very ugly. But it's one of those situations where if this thing can come down a bit more, and I like that right around that $1.90 mark, you could potentially get a good solid bounce. As I've said, are there guarantees? There are absolutely no guarantees. But from what's being risked relative to what could happen. So in other words, let's say the price comes down here and just even bounces up to right there. I mean, again, it could go even higher than that, but let's just say it goes up that high. Again, relative to what's being risked, you could be looking at a very, very nice risk-reward scenario. But if you're not going to be disciplined, and you're just going to hold and hope, well, this thing could be headed down, to be fair, down to, below $1. And you don't want to be sitting there holding below $1 when you bought up here. But if you can be disciplined, then again, from a risk-reward scenario, this thing could find a bid down there when everybody thinks it's, and everybody's given up, right? Because that's when things usually turn around, when everybody waves the white flag, and then all of a sudden it goes in the opposite direction. So again, not that that's what will happen, so that's why you want to manage risk. But if you can get any sort of bounce, or better yet, a full-blown reversal, then you could be looking at a very, very nice risk-reward scenario. Next one here, NNOX, and I like this one quite a bit because, again, the simplicity of what I'm about to do, you got to think a bunch of people have done it, which brings about that talking point of self-fulfilling prophecies. But you got to think a bunch of people have connected those two dots right there. You have that trend line. So once more, does it guarantee anything? No. But is it plausible? Is it valid to think that if the price comes up here and pushes up through right around, we'll call it the $11 mark, that break in and of itself could create additional buying pressure? Absolutely. And that's really that's what I find most interesting. It's just such the simplicity of that trend line. So does that bring about some self-fulfilling prophecies on Tuesday? Let's see what happens. Next one here, TSLA Tesla. And overall, looking like it's recovering, had a rough late morning as the price, came up and then came all the way back down here. But again, to be fair, nice bounces underway. But what I want to do is just out of curiosity's sake, and I think this level is now so we had this flat top area of resistance here, but what I'm going to do is bend this down and now create a trend or down-sloping trend line out of it by using, again, these highs over here and then that group right there. And if this thing can continue on up, like I said, I would be very, very curious, and you got to think a lot of other people will be too, how the price behave if it can get up to that level. So like I said, from an overarching standpoint, that's going to be a main area of resistance. In the near term, the level that I'll be watching from more so a day trading standpoint, right there at 162.50. And then also from a day trading standpoint, yeah, you have this level down here, but I'm going to go ahead and adjust this level up now that we got apparently a double bottom right off that level of, let's just call it 158.75. Again, you can see bottom one right there and then bottom two right there. So if the price comes back down, does it bounce from that area, or would that be a leading indicator of potential short to the downside? All those dynamics become very relevant at that point in time. But as of right now, it's kind of a wait and see game. But overall, those would be the main levels that I'll be watching moving forward. Next one, MARA, and the premise here is very straightforward, and it's just like the other one, 8QH, which was just there can be opportunity in the ugly, because yeah, no doubt about it. But this is really just a question of, does this thing want to potentially double bottom? As we just talked about with Tesla, and you can see that the price before has gotten down around this 855 mark. So you can see right there and right there. So the question just becomes, if the price can go down a bit further, does the price bounce, right? It's, again, nothing simple, and sometimes trading, I like the KISS method. Keep it simple, stupid. Very basic premise. At 855, does history repeat itself, or does it keep going down? Both are very, very possible, but nobody could accuse you of saying that 855 is some random location. No, there's logic behind it. Again, it comes back to risk management, though. If you're wrong, okay, you take this small, tight stop. But if you get even a bounce up to right there, then relative to what's being risked, you could be looking at a very nice situation. If you get a full-blown reversal, then you would be looking at a grand slam trade, again, relative to what was being risked in the first place. So if you like to play these situations where prices are coming down, potentially double bottoming out, then keep an eye on it. Next one, TQQQ, which is an ETF that measures the NASDAQ market. So if you believe the NASDAQ market as a whole is going to rise, this one will also rise. The difference being it just allows you access at a much lower price point, which makes it a very popular ETF. And this will mean a bit more to those of you that watched past videos. But if you have, then as of now, yeah, the price is still struggling with this resistance zone, more specifically the top of the zone, which is right where the price got rejected from today, up there around the 28.50 mark. So I'm going to go ahead and get rid of that level just so we can clean up the chart or keep it as clean as possible. It's become very apparent now that 28.50 will indeed be that key level to watch moving forward from the resistance side of things. In terms of levels of support, in the near term, there does seem to be a nice little uptrending line right there. So nice little pattern. Prices, not been able to push up through that level, but at the same time, the price does have this nice little miniature uptrend. So is that, producing kind of the coil-like spring before it gets another, goes back up there at 28.50 and pushes through it? Very well could be. But in the event the price falls below that green line, not the end of the world, because from more so the overarching standpoint, you still do have the 50-period moving average, which is now crossed back above the 200-period moving average. And that level of support would be down there right around the 27.40 mark. But yeah, no doubt about it. Nice little consolidation pattern here. Is it going to be enough to get up there and push up through 28.50? Let's see how the next couple of days play out, so grab your popcorn. So that wraps up the top 10 list. Again, if you like what you saw here, then I want you to get signed up for the free live online class. It'll be later this week, like I said, Thursday, May 4th at 7 p.m. Eastern Time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, if you would like for me to continue to make these videos, then please help me out by doing two easy things. Hit the like button, leave a comment, even if you say hi. Tell me what you traded today, tell me what you're watching tomorrow. But those two things help out a lot. And like I said, let me know that you're enjoying, and I will continue to make those videos. So get signed up for that free class, hit the like button, leave a comment below. Thanks for watching. Have a good one.